And we're back, coming at you live.
All right. Coming live
from Bill Haven here.
Bill Haven here. All right. Cool. So, good.
After you.
Good morning. So we're just gonna do a quick market chat. We could market chat. That's probably a good chat and markets. No, I don't know. We have no name for this yet, but we're excited to start this series of just quick updates on recent news articles about the real estate market, what we're seeing in our individual markets, and what we're also hearing from others that we speak to in other areas. So we will give this a name sooner or later, but we're happy that you're here with us. Thank you for listening. We hope it is offering you some value, whether you're a realtor or a buyer, seller in wherever you are. We are here to just provide some information nationally as well as locally, and we're glad you're here. So thank you again. Kyle, tell me, what are you seeing out in the real estate world right now? This is, for the record, June 13th that we're recording it. So,
yeah, nice. Yeah. So, I mean, obviously, we're seeing a lot more inventory hit the market here. I mean, us personally, we have more inventory hitting the market, more sellers. You know, I always tell people, especially here, so I'm in the Pensacola market, so really destined to Mobile. Like I said, I'm definitely seeing more houses hit the market. We're seeing them on the market for longer. And we're also seeing more price adjustments, probably quicker than we were seeing in the last little bit. Plenty of choices, plenty of options now. I feel like we're leveling towards more of a normal market. Obviously, the last, 2.5 years were very abnormal due to COVID and everything else going on. So that's what we're seeing. We're definitely seeing more negotiation happen, which is great. It means you can get a deal. Just means that pricing has to be right. Houses are still selling, but they have to be priced correctly.
Yeah, no, so it's actually interesting. I'll pull up some articles because there were quite a few that came up with some details that not only, so it's still it seems like the market itself nationally is balancing out. We do have more we had more closings in May this year than we did last year. So there is an improvement. I think part of that is a psychological thing about buyers getting a little bit more accepting of the new normal of the interest rates. Even though we keep getting teased that they're going to make rate cuts. We don't know when or how much that will be, if at all. For the record, my theory is they're not. I think they're playing the media. They're learning from the Kardashians. Jeremy Powell's just playing us all a fool. And but we'll see. Obviously I'd love for the rates to make an adjustment to kind of make things move quicker. But as of right now, the data shows that we have more closings this year than we did last year, or May of this year versus May of last year. So there is some increase there. The overall price has also increased, which is interesting, even though we are now seeing more price cuts. So that'll be interesting how we see that in the next couple of months, whether all those price cuts do finally correlate to an average price or median price decrease. But just that combination of information, like, it's interesting. So, like, what does it mean, right? What does it mean to the regular buyer or seller out there? For buyers, I hated the was it marry the house, date the rate statement? Hate it. You don't know what's coming. So Yes, is it a good time to buy? Yes, it is, but it's only a good time to buy if you can actually afford it, right? So don't commit yourself to something you are just stretching way too much.
Don't become house poor.
Don't be house poor.
Don't be house poor.
Make a smart financial decision. If you can afford it, then fantastic. I do recommend that you take advantage of the current state of the market in order to negotiate and get more out of a seller in those negotiations, and move forward and finally purchase a house. Because as we know, in the long term, no matter what, not no matter what, but in the long term, you will find yourself with equity, whether it's even just in the amount that you've paid down your own loan, or whether the market has helped you out in creating additional equity. Either way, it is a manner or a method to hedge from inflation, which we currently have a lot of, and we don't know how it's going to proceed into the future. But it's home ownership is crucial to increasing your net worth and being able to budget. I think is huge, because you have a bit more of a understanding of what expenses you will have throughout the year. That being said, lots of expenses in home ownership that in and of itself. So maintenance and all of that. So that's maybe a conversation for another day. So for buyers, like I said, great time to negotiate. If you can afford it, do it. Try to get credits for your interest
try to get a rate buy down. Absolutely.
Yep.
So, and we're also seeing a lot of at least here in this market, not to cut you off here, but at least here in this market, we're seeing a lot of the new construction builders offer what I'm calling insane rates comparatively to the national average. I got an email yesterday. When did we get that email? I'm sure you got the email too. That there's a builder here that's offering 4.99 for government. Right? I believe it's DR Horton. Yeah. So they're offering 4.99% for government rate or government loans. So that's your FHA, VAs. I mean, some of those you're not even bringing money to closing. You're just paying, your down payment if you have one. Obviously, with a VA, you don't necessarily have to have one. Yeah. With FHA, you are bringing 3.5%, and I mean that's no closing costs in addition to that because of some of the other incentives that they're offering.
Yeah, that's massive in comparison to like what's out on the open market. I mean, it's not uncommon to see a 7 on your interest rate.
Not uncommon.
No. So, like I said, if you are buying a resale home, get those buy down points, whether it's temporary or the permanent buy downs. I personally, because of my thought of what's to come, I would rather go with the permanent buy down rather than the temporary, because let's be real, we don't know what's going to happen in the next 3 years.
35, yeah.
If you are budgeting today for what it can be in the next 3 years, if you're doing those temporary buy downs, then you know what, go for it. I think as long as you know that you're prepared for what that is, don't bank on the idea of, I could just refi, because if interest rates are higher, then I mean, whatever you locked in now is probably going to be your better choice. So, we'll see. But I'm more of a permanent mindset in regards to locking in what you can have. And just planning for it. For sellers, on the other hand, it's not a buyer's market yet. It's starting to be a little bit more balanced, but it's not a buyer's market yet because of the whole interest rate situation. Right. But the fact that inventory is starting to increase and they have the ability to pick and choose at which house they're going to throw an offer at, and have to evaluate the value to cost that they're about to dive into, buyers are being picky. And I don't blame them for it. You need to squeeze as much value into what you're about to purchase, especially with a 7% interest rate. So sellers need to have that in mind when we're pricing. It's don't try to go for that aspirational type pricing, because you're going to find yourself sitting. I mean, I know, what's the average days on market right now in Pensacola?
I want to say I saw 59, 60 plus.
Yeah. So
right around there.
It's a good bit of time. It's almost 2 months basically
Mhm.
of days on market. So if you're going to go for that aspirational pricing, don't be surprised when you find yourself at 70 days, 80 days, 90 days. I hope you don't get that high, but it's possible, right?
Mhm.
Meanwhile, if you are going to be a lot more aggressive in your pricing and what's it called? We call it the event pricing.
Mhm.
Then you are going to get more eyes and you're going to be more valuable in regards to the comparisons of what buyers are looking at. That being said, sellers need to go ahead and do those small touches now. If you're planning on selling, do those small touches because they will see it. The buyers will see it.
I think
Painting, doorknobs, little things are going to make it. Just changing your lighting,
Mhm.
updating your lighting a little. It's not that expensive, but can make a big difference. I think if we can get more sellers to think about that on the front end, then it would help as well on the sales side.
Yeah, I think that goes back to, a lot of people are buying houses like 3 years ago and they're not really adding any new value, but yet the price difference from 3 years ago, like buyers can see that. Buyers can see what it last sold for. I think we have some of the most informed buyers ever right now because
Ever.
people are looking on Zillow, people are looking on realtor.com, homes.com, wherever,
Yeah.
and you can see the history of what it sold for. And if nothing's been done since that last time, buyers aren't really looking to pay, whatever it is, 100, 200K more.
Yeah, totally. And, if we're going to make it more into a locally based conversation here for a second, like in Florida, we are also thinking about the fact that we have all the added costs right now. Insurance is high, so that's going to push everyone's mortgage payment or monthly payment higher up because of the escrow amounts. Our property taxes are pretty high, not gonna lie. So that is all part of what buyers are starting to assume and realize the actual cost of what they're about to get into. So it's a big thing. And, sellers really need to keep all of that in mind. Yep. Can you hear me? There you go.
Oh, I can hear you now.
Obviously, you want to try to squeeze out the most amount of Really? I don't know.
Oh, I can hear you now.
Oh, you can?
I can now.
Yes. Okay. So obviously, you want to squeeze the most amount of equity you could possibly do, but it will take some work. You need to present yourself in the most best version of your own of yourself in their home. You know what I mean? In the pictures, decluttering is going to help. Getting it staged, I'm not fully on that game yet. I will say I hate the virtual staging pictures, but that's just me. It does help a little. You don't need true staging, but just an idea, a way to kind of provide an idea of how to use some space. Because some of these houses, especially these older houses that we see a lot in Pensacola, they have like odd rooms. So like giving a buyer an idea of how to use that room is helpful, but little bits. It's actually pretty interesting. Actually, just yesterday, Redfin CEO came out with an article and a statement. Let me pull it up real quick. He said that in key metros in states like Florida and Texas are already seeing major price cuts. And he says that home prices will continue to fall in the summer as sellers can no longer postpone their sale. Possibly true. Makes sense. Zach from up in Delaware, he was talking about this a little bit the other day, that he had a seller in, I think he said Clearwater, Florida. It's been 3 months. I think it was like over $1 million home. No showings, 3 months. Obviously, we just talked about it. property taxes $1 million, pretty high in Florida.
Yeah.
And then I'm sure if you're getting a mortgage, that insurance is going to
It's
cost you
hefty.
a pretty penny.
Yeah.
It's going to. I mean, we're looking at Pensacola alone on a regular 3-bed, 2-bath home. If it's not brand new construction, your insurance policy is probably like $3,000, no questions asked. Like if someone gives you a quote at 5,000, I'll be like, yeah, maybe it's a little high. But if you get a $2,000 insurance policy, I'm like, lucky you. Like lock that in, but also maybe check the coverage limits because that seems odd.
Yeah.
It's wild. It's getting pretty expensive to what other places are getting. So things to consider. It's a pretty interesting market right now, I think. But you got to keep going. It all depends on what your goal is at the end of the day. If you're a buyer and you really need to buy, or if you can buy more specifically, and you can afford it, go for it. Do it. A lot of resale homes are great investments. I probably would tell you it's a great time to buy something that maybe needs a little work so that you can put the work into it if you can afford that. If not, if you're really, really stuck on what that monthly amount is, I'm probably going to tell you new construction is your best bet.
Yep. Yeah. I mean, that's very true. I think a lot of people, just to touch on the putting in sweat equity, I think a lot of the houses here, nobody has really done anything to them since they bought it. And so there's no like character or differentiation. So I'm seeing a lot of that in the market as well. I'll show 10, 15 houses. They're all very similar paint colors, very similar granites, all of that. So there's not a ton of differentiation. So then they just go with, the least price.
Yeah. Yeah. It's interesting. So, Mortgage News Daily earlier this week on the 10th, so just 3 days ago, they put out a report that they saw a slight increase in the mortgage rates and an immediate decrease in the mortgage applications, which makes sense. Like the more that goes up, the more buyers are like hesitant. It's interesting. I mean, we both have had conversations with sellers too that maybe they want to downsize, but then they don't want to buy anything before they sell the house because maybe they need to. Maybe they don't need to, but they still would prefer. They don't want the double payment, or they want to use the equity from the home in order to purchase that next one. But once they realize that the cost for this downsized home might be the same or even a little bit more than what this larger house, I don't blame them for the lock-in effect is real. Like I don't blame them for wanting to just stay in that larger home and keep the same mortgage payment because they probably refied at a 2%, a 3%, and they're sitting pretty. No problem.
Yeah,
I don't blame them. So it's going to be interesting as we move forward. A lot of first-time home buyers though are still interested, which is great. I love to see that it's still a consistent thing that the newer generation or the younger generation, I should say, is wanting to get in. And do it. So it's going to be a fun summer for us in the business, I think, as we kind of roll with the punches, especially with everything changing or adjusting from all the NAR settlements and the changes in business that we have to do with buyers. But great opportunity for us to just really share what we actually do, because I think us as realtors, sometimes we take care of all the problems before our customer even knows it happened, and then we don't even tell them because we fixed it. But now we're going to have to share those problems. So we've made it too smooth. We've made it too smooth and have done our job too well sometimes. So let's do this. So we're in two different markets right now. Obviously, we have the team that's based out of the Pensacola area going into Baldwin, and then now we're trying to build out the second team up in North Alabama. Where I am, I'm specifically in Coleman, near Smith Lake. Awesome location. Kyle, let's start with, I'll get two questions for you.
Okay.
What are your assumptions in what's to come in the next few months and, deep summer market and then heading into the winter? What's your best guess of what's to come?
So for us specifically, it's just kind of a known fact that summer slows down. the number of transactions. That being said, that's not a full market, but in Pensacola, the just coastal market that we're in, we do see a lot of slowdown. Part of that's because we are driven by a lot of military, moves here and there, and those don't normally happen over the summer. However, there are some. So I expect us to see a drop in transactions for the next couple of months. Obviously, we are also in an election year. So, the closer we get to August, probably the slower it will get. I agree with Eric. I don't really see interest rates going down. If they do, maybe we'll be at like a 6.5, but not below that.
If that does happen, it's going to be a storm of buyers.
Yep, it would definitely help. So if that happens, we would definitely see more buyers, which then I would be wrong on the number of transactions that will happen.
Yeah.
I do think inventory is going to keep rising as we go through. I think a lot of people have been in their homes for, that magic, whatever it is, 5 to 7 years. Some people locked in that low rate, but they need something new. Life changes. So I do see that continuing to happen. And what was question number two?
Curious, because I have my theory on it, but do you think, since we're on both the Florida and Alabama side down on the coast, do you think they are different markets? Like, do you see the two of them kind of go like fork in the road and hit a different way, or what do you see there?
So Baldwin's still one of the fastest growing counties in the country. You can get a lot of house for a little bit less on the Alabama side.
Yep.
So I do think they are very different markets. Even Baldwin to Mobile, I think, are different markets. I continue to see probably Baldwin continue to grow. Pensacola is also going to grow just at a slower rate. Everybody's heard of Pensacola Beach. Everybody's heard of Orange Beach and the general location that we're in, right? The South. So I do see that continue to rise. I see, insurance is a little bit more affordable in Baldwin or in Alabama in general, and property taxes obviously are less as well. So I see, investors probably moving more towards that Orange Beach, Gulf Shores than potentially the Pensacola Beach, Perdido.
Because of insurance. Yeah. Honestly, same beach. Love them both.
I mean, they're great. Yeah.
Yeah. I guess the Alabama side has, what is it? The gold fortified
So
standards?
they have different fortification standards. So the new construction over there is certified gold, which just means that it has some extra construction materials in there, really your hurricane bracing and everything. Very similar to how it's built in Florida. However, just not, we don't have the certifications over here yet. But that gold certification helps so much on insurance, because there for a while, Baldwin was having not necessarily an insurance crisis, but they were also having very high insurance rates, and those have kind of settled.
Yeah. So that's huge. That's really huge. I mean, I think that was a great move on Alabama's path,
the developers
creating those certifications for insurance purposes specifically. Yeah. Okay, great. That's funny. I think so too. I think they're very different markets. You do get a little bit more on the Baldwin side. I think if insurance does become a thing, or is a conscious just factor in the purchasing, you're going to lean more towards the Alabama side. Yeah. So we'll see. I mean, like I said, I mean, this is an interesting market. We both have only been in the last 5 years in the market. So we didn't personally experience the 06 era, where everything crashed, and then slowly, I mean, up until basically 2019, things came back up. We were just there for the COVID era, which is its own little phenomenon at the end of the day. So this will be interesting. I love it. And it's been useful for sure to have the access that we have throughout our brokerage to talk to other agents that have gone through these different markets.
Absolutely.
Awesome. Well, I think that's a good note to end this. That's your quick update for the market. June 13th is when we're recording this, so just that way you know. But I think it's going to prove to be true in the months to come that this will probably stay pretty consistent unless there's a drastic change with these interest rates. So we shall see. Only time will tell. But thanks for being with us. I hope this continues to be of value for all of you listening. Please stay tuned as more is to come for sure.
Yep. Awesome.
Yeah.
Later.